What if you didn't have to wait until you were 65 to stop working? What if you could compress 40 years of traditional labor into just 10 years of aggressive, calculated strategy? Most people look at financial independence and think it's a game of luck. They think it's reserved for the lottery winners, the high-earning CEOs, or the people who were just born into the right circles. But that is a lie, and it is a lie the system feeds you to keep you dependent. The system needs you as a consumer. It needs you as an employee. It does not need you as an investor, and it certainly does not want you to be a business owner. Financial independence is not a matter of luck. It is a matter of physics. It is about building an engine that runs even when you're asleep. It is about constructing a system where your capital does the heavy lifting, not your back. But here is the tragedy. Most people get started, they put in the work, and then they quit right before the engine switches on. They stop just before the breakthrough because they cannot handle the boredom and the invisibility of the early phases. Today, we are not just going to talk about saving money. We are going to build your 10-year roadmap, define the exact tipping point where compounding becomes unstoppable, and show you how to build a money machine that lasts through any economic cycle. Let's start by looking at why so many people give up. It's because of what I call the frustration gap. At the start, you were the only engine in the room. You save $400 a month, you cut your expenses, you do the work. After a full year, you have $4,800. It feels like a drop in the ocean. You look around, your friends are buying new cars, traveling, and living for today. You are sacrificing. And when you look at that $4,800, it feels like you are doing all the work for zero return. That is the snowball phase. It's supposed to be hard. It's supposed to feel invisible. But here's the secret. Every dollar you save right now isn't just money. It's a foundational brick. You aren't just building a pile of cash. You're building the base that will eventually allow your money to start earning its own money. If you quit now, you don't just lose the money. You kill the momentum before it ever gets a chance to gather speed. The system relies on your impatience. It profits when you stop. Stay in the game. You're not building a bank account. You're building a life-changing system. Once you accept that, you need a way to track it. Stop guessing when you will be free. You need a clock. You need a way to measure the distance between where you are and where you want to be. In the world of high-level finance, that clock is the rule of 72. It's remarkably simple. Take the number 72 and divide it by your average annual return. The result is the number of years it takes for your money to double. If you're earning a 10% average annual return, your money doubles every 7.2 years. Look at the progression. At year 0, you have $50,000. At year 7, you have $100,000. At year 14, you have $200,000. At year 21, you have $400,000. The first double takes years of sweat and discipline. The second double happens while you're barely watching. The third double, that's where the system accelerates and your wealth starts outpacing your contributions. This is your countdown. This is your exit strategy. Every time you complete a doubling cycle, you're shaving years off your working life. Understand this, the rule of 72 is not a guarantee, but it is a forecast. Markets rise and fall, and volatility is the price of admission. However, the formula gives you a reliable way to estimate how time and returns interact. The danger is not the market fluctuations. The danger is waiting to start. Missing just one cycle can double your overall timeline. That's not a small delay. That's the difference between freedom at 45 and grinding until 60. Knowing the clock is half the battle. Now we have to talk about fuel. You need a two-part strategy, offense and defense. Offense is how you bring money in, raise your income, learn new high-value skills, start that side venture. Your job is to maximize the flow. If you're currently earning $4,000 a month and saving $400, you're moving forward, but you're moving slowly. If you raise that income to $8,000 or $10,000 while keeping your lifestyle the same, the math changes drastically. Your savings rate triples and your doubling cycles happen faster. Defense, however, is how you keep it. This is where most people fail. When you get a raise, when you get that promotion, do not change your lifestyle. Do not upgrade the car. Do not move to the bigger apartment.
Take the gap between your new income and your old expenses and invest it. Every extra dollar you earn is a silent worker. If you spend it, you have fired that worker. If you invest it, that worker stays on your team forever. They never get sick, they never ask for a raise, and they never sleep. By the time you reach the second doubling cycle, you'll realize that your wealth growth is finally outpacing your labor. That's the moment everything changes. For the next 12 months, try this experiment. Every time your pay increases, whether from a raise, a bonus, or a new income stream, automatically invest it. Don't let it touch your spending account. Treat every new dollar as if it were a new employee joining your firm. Your job is to assign them to permanent roles in your investment system. Now, to make sure this machine doesn't break down, we need to talk about architecture. A professional portfolio isn't a random pile of stocks, it's a machine with 3 distinct layers. If you're missing one, you're vulnerable. Layer 1 is growth, the engine. This is your broad index funds and your core equity holdings. This layer pushes your money past inflation. It's your speed. Layer 2 is income, the fuel. These are your dividend stocks, your REITs, your rental properties. These assets pay you even when the market is flat. This income layer keeps the machine running without you ever having to sell your core assets. It's the lifeblood of financial independence. Layer 3 is stability, the brakes. This is your bonds, your high-yield savings, and your gold positions. This is your insurance. This is what keeps you from having to sell your growth assets when the market tanks. Without the brakes, you crash. Without the engine, you go nowhere. Together, these 3 layers work like a well-oiled vehicle. Before we wrap up, there's one final principle that keeps the machine in motion: reinvestment. Even after you reach financial independence, keep reinvesting a portion of your passive income. Setting aside 10 to 20% of your dividends or rental income back into the system ensures your portfolio continues to outpace inflation. This step extends the life of your wealth and helps it grow long after traditional contributions stop. But let's address the elephant in the room, the psychological test. The framework is simple, but the test is long. The hardest part is not the math. It's resisting the urge to interrupt the process. It's resisting the urge to chase the shiny objects, the get-rich-quick crypto tokens, the meme stocks, the get-rich-in-6 weeks courses. These are just distractions designed to steal your capital. Real wealth is boring. Real wealth is a long-term commitment. The system is designed to keep you a consumer. The banks want your interest. The corporations want your paycheck. They want you to stay in the snowball phase forever because that's where they profit. Break the cycle. Calculate your monthly investable amount. Commit to a 12-month experiment. Every raise, every bonus, every extra dollar goes straight to the machine. No lifestyle creep. Watch the clock. Every dollar you invest today is a silent worker that never clocks out, never asks for a raise, and never calls in sick. Calculate your monthly investable amount today and commit to this 12-month experiment. Treat your financial life like a business because it is one. Wealth is consistent. It's compounding. It's the result of years of disciplined decisions that eventually lead to the most exciting freedom you'll ever experience. The freedom to choose what you do with your time. You're not waiting for a miracle. You're building a machine. This is NetPlus, where money stops being a mystery and becomes a language you finally understand. Hit subscribe for more deep dive lessons that actually stick.